Hi everyone, let's have a quick look at the semiconductor space. We can see that most of the market is green other than SMCI. TSMC just had their earnings and the stock has reacted over 11%. So it's really good, and you can see that it kind of lifts the market after yesterday's sell off after ASML, the Dutch company that makes the EUV machines that essentially every single company on this list relies on, had a, at least according to the market, let's say a bad earnings report. I don't buy that, to be honest. If you look at the discussions online, I think everything is around. If we start, for example, with TSMC, we can see that TSMC and their CEO says that whether the AI demand is real or not, in his judgment, is it's real. And he's been saying that that they are increasing their manufacturing capability for example, the AI accelerators, or like say AI GPUs that mostly from Nvidia and even AMD. And he said actually in the last earnings that they're trying as much as possible to 2x or 3x their packaging capability for those kind of chips. And even yesterday he said that they see that AI is the real thing there, and he sees that even utilization of AI kind of helps them to save around the 1 billion US dollar on annual basis. So it's a really strong commitment from the CEO of the world largest manufacturer of the semiconductors. And you can actually see, if we quickly look at the numbers, I think I always like TSMC's earnings on this page 3 and page 4. We can see that they have this pie chart of where the revenue is coming from. And as we are now seeing that 3 nanometer is, 3 nanometer is getting a good chunk of it. And I would say it's well into its mature kind of lifetime now. And I would expect 3 nanometer to go up to 25, maybe 30% by next year sometime. And as 7 nanometer now starts to become, obviously it's not a legacy node, but it's a, let's say, older node. I think the first 7 nanometer products, we've seen them in 2018 or 19. So it's been out there for a while. And interestingly, the 7 nanometer here, you can see according to them, in the blue part of the graph, is actually increasing compared to same quarter last year. And then we can see that the 5 nanometer is kind of staying at similar kind of level, and obviously 3 nanometer increasing. And this is good for who? Well, this is good for obviously ASML. I know that the stock had a really bad reaction yesterday, but as I mentioned, everyone on this semiconductor list relies on ASML's machine. Most of them are relying on TSMC, but every single one of them are relying on ASML at some point. Because although Intel has their own manufacturing, and well, to be honest, I have to correct myself, even Intel kind of depends on TSMC to some degree, as they are outsourcing part of their manufacturing to some extent to TSMC. But mostly you're either with TSMC or you're, let's say, with the rest, like Intel, Samsung, and so on, or even Global Foundry on the, let's say, lesser nodes. But yeah, everyone is depending on ASML, and I think people are missing, they're missing like what this company is. Their outlook for next quarter, for example, ASML is almost 9 billion, or let's say just around 9 billion, right? Gross margin is around 49 to 50. And I think the one reason why maybe the stock reacted a little bit, badly is what we've seen here. So the net bookings was much lower than expected, but I think people are again missing something here. Usually ASML's bookings are, they are very up and down. So maybe one quarter is good and the next quarter is bad, and so on and so forth. So it's not a stable kind of order intake. So I think if you're gonna judge ASML's numbers based on, let's say, order bookings, I think you should do that on average of, let's say, 2 quarters at the bare minimum. So half a year essentially. If you only look at one single quarter, I think you're running the risk of essentially missing the bigger picture. And this is what I think part of the reason why the company kind of tanked a bit yesterday. In addition to that, I know previously, as they also say here on Twitter, the app Economy Inside, they kind of guided for 30 to 40 billion US dollar sales next year. Now they're decreasing it to 30 to 35. Sure, in the short term it's not as much as some people wanted, but again, don't miss the future of this company, because right now it's trading around 20 to 22 forward PE, right? So, and you can see if you look at market cap. So ASML is just around 300 billion or so, and Nvidia is at 3.4 trillion. So Nvidia is 11 or 12 times larger than ASML currently, and without ASML, Nvidia can't do anything essentially, right? So at least on the hardware side, but hardware is everything. Like you can have the best software ever, but if you're running your software on a, I don't know, a 12 nanometer node, and your competitor is running it on, a 3 or 4 nanometer node, you're in big trouble. So everyone depends on ASML, and I think people are missing the future. Sure, not as great as possible of 2025 is not what we have wanted, but in the future, when I'm saying the future, I'm talking about 2026. I think this company is gonna do really great. Remember that, not only is TSMC, Intel, Samsung that are depending on ASML, also the memory manufacturers, like Micron, for example, that makes all this HBM and general memory for different kind of systems. They are, gonna use EUV very soon. We know that Samsungs are kind of using it in their memory manufacturing as well, and most importantly, SK Hynix, the Korean company, the maybe the best memory manufacturer on the planet. They're also, using EUV machines, not for, creating chips, just for memory, right? And I think as we go onwards, and if we go back to TSMC's earnings weekly, you can see here, as this pie chart, as I always say, the smaller and smaller the nodes get, and the more and more those nodes get more and more of the revenue share. And you can see actually from 7 nanometer through 3 nanometer, that's a good 60% of their sales. What does that mean? Well, 60% of their sales being essentially EUV node. I know that some of the 7 nanometer stuff might not directly use EUV, but some of it will use. But if you just take that same train of thought, at some point in the up and coming 2 or 3 years, the fraction of EUV applications that kind of gives TSMC their revenue is gonna be well over 70-75%. And if you're assuming that TSMC will increase their revenue, I think we're in a position where, remember that earlier this year, TSMC has kind of increased their prices for their services to their customers. It could be, every single quarter they increase price something. Either it's packaging, it's the wafers, or whatever it is. Sure, they have also had a cost increase. For example, I know that the electricity in Taiwan, which TSMC uses a lot, has increased almost 2x in the past 3 or 4 years. But in addition to that, you can see that TSMC's margin has kind of been going up over the last 3 or 4 years. And why did TSMC increase their price? Well, you know that if you go back to this list here, you can see Nvidia. They're up there, king of the hill with 3.5 trillion market cap. They kind of increase their prices all the time, right, for their chips. So TSMC is saying, well, we're making your chips. Why shouldn't we get paid? So let's, we're gonna increase our prices, and that's actually what they did. And kind of Nvidia CEO Jensen Huang was like, yeah, I mean, you're basically right. So it's fine if you increase your prices. They have such insane margins, anyways. But then I think the next step in this is ASML. ASML is gonna go to TSMC at some point in the near future and say, you know what? We're selling our very expensive, very important machines to you. Why shouldn't we make more money, right? And that's well, at some point this train of thought had to stop, obviously. But I think in the closest terms, I think there's room for ASML to surprise everyone for late 2025 as we go into 2026. I think they can really surprise people. I could easily see this be a 700-800 billion market cap company, even more. And as I mentioned previously, according to my understanding of this, let's say EUV manufacturing, I think the productivity with the high-end EUV machines is kind of, at least in the first kind of iteration, is going to be a bit slow. And that means that if you're a fab, be it Intel, Samsung, or TSMC, and you're going to have some sort of productivity, let's say, X amount of chips per hour or X amount of chips per day. And if your next generation EUV machines are not as productive as the first generation in the beginning, you need more of them. If you don't buy more of them, your competitor will get it and they'll get the business. So I just don't see how this company at around 20-22 forward PE is not worth it. This is essentially the safest company on the planet. Now there are risks to it. Sure, the problem with that, a lot of their revenue is coming from China, and because it's a highly sensitive business, they're kind of getting pressure from the US government to not sell into China. So there's a lot of that going on. But I don't think anything substantial will happen in that regard. Sure, they might not be able to sell their most finest EUV machines in China, but I don't think their China business will go down to zero overnight. So because that would come with a lot of geopolitical implications, and everyone would lose on it. So yeah, I think if you zoom out, I would say that on this list, despite everything being green and most of it being, yeah, kind of all-time high. Look at Nvidia, for example, even TSM. I think there's a lot of good value here. And again, sorry to be that guy. In my opinion, the best value here is AMD. This is the best one in terms of risk reward, in my opinion. I think they're way too low valued compared to what the potential of the company is. And as well, I think they're kind of their earnings coming in 29th of October. I think they'll show you that they'll have their best ever quarterly earnings, both in just general revenue, but also in general purpose CPU revenue, as well in server side, as well as maybe I don't know 1.6 to 2 billion a quarter of AI GPU, which is really strong for AMD. So I think that's gonna do it for today. I don't think there's anything bad going on in this semi space. I'm looking at all the indicators, be it the CEO of TSMC, be it the demand out there from the companies in the supply chain. Looking at the likes of Amazon, AMD, Nvidia, that they seem to doing great, and the demand for them is huge. And if you actually go one step down to the consumer level and you look at the applications that kind of are out there for that are utilizing these AI chips. I think there's a lot of interesting applications out there. You'll see like video editing applications utilizing AI. You'll see actually AI that, for example, not only you write a text and you get a picture, now you can write a text and get a kind of fairly functioning video. So that's there's a lot of potential in this area. And although I was a bit cautious at the end of last year, trying to gauge the level of is it a hype, is it dangerous, I think you should always be cautious. This is not investment advice, but I think if you zoom out, I think there's a lot of value to be found here. So like the video please, and thank you for your time and watching. I really appreciate it. And also for you guys that stick by to the end of the video, I promise you that I've ordered a better microphone, so that's gonna be sorted in the up and coming week or so. So yeah, thank you for watching and see you in the next one.